So this is recording on the issuance of stock, and corporations can issue a stock. So we can just imagine that a stock is just like a certificate or a piece of paper that has on there the stock and the par value of the stock, and shareholders can pay cash for their stock. Now, the cash amount doesn't necessarily have to match the par value that's listed on that stock or the stated value that's listed on that stock. So the cash amount can be the same amount as the par value that's shown on the stock, or it can be more. But if it is more that the shareholder is paying to the corporation to retrieve the stock, the corporation has to record that additional cash payment that's received by the shareholder. So what you see here on the screen, there are a few different types of examples here that actually reflects the issuance of stock and the cash amount that's received by the corporation based on the stock's par value. Okay, so I made up a company here called Gumble Corporation. Issues 15,000 shares of common stock. Okay, so let me underline this: 15,000 shares of common stock in an amount of $460,000 in cash. So that stock already has an amount on there of $460,000. So that $460,000, let me box this up here. This is the market value. It's the market value of the stock. So the corporation is saying, hey, these $15,000 of shares is worth $460,000. So the investor or shareholder is going to pay $460,000 to retrieve that stock from the corporation. So it says here, prepare and record the journal entries for the following situations that are shown below. For the first transaction, we're going to assume that the stock has a $9 par value. Okay, that's the stock certificate displaying a $9 par value. Number two, we're going to assume that the stock has a $26 stated value. So that's the stock certificate that displays $26 as the stated value. And then number three, we have the stock has a $12 par value there. Okay. So the first entry here for number one, we see that the cash account is going to be debited for $460,000. Okay. This cash account here, or this amount of $460,000 is debited, it is increasing this cash account, which reflects the market value of the stock. Okay, this is how much the corporation is receiving. So let me put on here corporation received by corporation. So Gumble Corporation is receiving this cash. Okay, so that's an increase in capital for Gumble. So Gumble can use that cash, hopefully, for acquiring more resources to help grow the business. So that's the debit. So the credit, as you see here, there are two accounts that are credited. So the first account is common stock. So we have to credit this account, and we see it's $9 par. So we're going to take that $9 par and multiply it by the 15,000 shares that were issued to the shareholder, assuming that one shareholder was paid $460,000. So with common stock, we're going to have to credit that account by $135,000, and $135,000 is going to an equity account. Okay, that's the common stock. So this is an equity account. So on a balance sheet, you will see common stock, $9 par. That's equity that will be listed in the balance sheet underneath the equity section. So you notice it's $135,000, but the cash that was received was $460,000. So that lets you know that there was a lot more that was paid to receive that common stock, which means that the difference or the additional amount is going to go towards what is called an additional paid in capital common stock. So this is also an equity account. So whenever you look at the balance sheet, you will see this account, additional paid in capital, underneath the equity section. So that difference of 460,000 subtracted from 135 of 325,000 is going to be also credited to an equity account called additional paid in capital common stock, or it's abbreviated. You may see an abbreviation, abbreviated, I want to say term called APIC, APIC, which is additional paid in capital. Okay. So we're balanced. We're good to go. So these are the two important, I want to say, accounts here when it comes to recording the issuance of stocks. Okay, now we go to the next one here. So number 2, the stock has a $26 stated value. So same as the first one here, except that the stated value is $26 instead of $9. So the cash that was received doesn't change. It's $460,000, and that again, that's the market value. That's how much the company's saying, hey, 15,000 shares is worth $460,000 in cash. So pay up, shareholder. So the shareholder did. This is why Gumbel Corporation received $460,000. Okay, so since this has a $26 stated value, you're going to take the $26 and multiply it by 15,000 shares, and that's going to give you $390,000. So that's going to be credited to the common stock account, which again is your equity account. And then the difference here from 460,000 and 390 of 70,000 is also going to be credited. Okay, it's going to be credited to additional paid in capital common stock. So it's two different accounts. They're both equity accounts though. So two different accounts, but they're both equity accounts. So if there's additional payment that was made, you're going to code that additional payment to additional paid in capital common stock. So hopefully you can remember that if there's a difference in this, and if the cash, let me put on here over the side here, if the cash is greater than the common stock, you're going to record the difference in additional paid in capital dash common stock, since this is for common stock. Right. So the next one here, number 3, the stock has a $12 par value. Okay. So same as the first two here, first two entries, cash is going to be debited for $460,000. That is the market value. So we're going to increase the cash account by $460,000. Okay, so since this is a $12 par common stock, or the stock has a $12 par value, you're going to take the 15,000 shares, multiply by $12 per share. That's going to give you $180,000. Okay, so that's going to be credited to the common stock account. And the difference of 460,000, subtract out the 180,000, that's going to give you $280,000. And that $280,000 is going to get coded or recorded in additional paid in capital dash common stock. Okay, so remember these two, common stock and additional paid in capital common stock, these are equity accounts. So on the balance sheet, underneath the equity section, you will see first common stock, comma, $12 par. And then you're going to also see right below it, additional paid in capital dash common stock, and you're going to also see the amount as well.